Hello and welcome to today's show. Thank you for tuning in. I am Lisa J. Stocks, and today I'm having a full Q&A show slash birthday celebration. So, guys, in the comments, please share any questions that you might have. And I have a guest with me today that came on to help me co-host as well as ask his questions in real time. So I'm going to bring him up and let him introduce himself. So, guys.
Hey, what's going on, everybody? Hopefully, y'all are having a wonderful Sunday. Thank you so much, Lisa, for allowing me to be here. My name is Anthony Weaver, host of the About That Wallet podcast, where we help the sandwich generation build strong financial habits.
Thank you, Anthony, for coming up. And let's take a look at the chat and see who's here so far. So, guys, Anthony put in the chat already for me, road to 5,000. So, last I look, I only need 10 more subscribers to hit 5,000. It's been a very good week for me. I picked up like 500 subscribers in the last like 4 days. So, I'm almost there. So, thank you, Robert. Cutting Edge, um, Famous, and Chocolate Drop. Thank you, everyone who is tuning in so far. And what's up?
I like Chocolate Drop. The name.
Chocolate Drop. There she is. Happy birthday, Money Lady. Thank you for all the info. Appreciate you. So, let's see. Boop and Budgets, the one. Thank you for the birthday wishes. So this is a Q&A show. So guys, drop your comments. And oh, wow. Thank you, Robert, for the super chat. Let me see. So guys, drop your comments. And Vincent also, thank you for that super chat. I extended an offer to certain people to come on. So far, Anthony's the only person who hit that link that I shared to come on and ask their question in real time. Robert, I think you might have that link also if you did want to come on, if you're available. So let me see. I'm not going to kill us with this, but
No,
thank
you're
you
fine.
for the two first super chats.
Thank you so much. We do greatly appreciate it.
So let's get started. Rooted also, thank you for the super chat. You guys almost got me to my goal already for the day. Thank you for sponsoring today's show. So, since you are here with me, Anthony, you will help me with the questions. But please, first, let's start off with the questions that you have for me.
Okay. Um, Which I have my list. You already have the list of questions. So sorry. But my
You
first one
forgot your
was,
questions? You forgot your question?
well, I'm gonna pull them up right quick. But
No.
I know one of them is, far as when it comes to your stocks, like what stock, like how do you know, like what is your niche of stocks that you actually focus on when you go to invest, or like what industry?
What? Okay. So when it comes to individual stocks, is that what you mean?
Yes.
Okay. So, guys, I do invest into ETFs. That is my foundation. But when it comes to individual stocks, I definitely have gravitated towards technology. And even if it's not quite technology, it's highly technology. And I'll give you a few examples. Microsoft, Apple, Nvidia, definitely technology. Tesla, car company predominantly, but I consider that kind of, crossover to technology. Um, and I would say the other one would be consumer goods with like Amazon. And besides that, I would say Google and like Meta are communications, but I feel like there's a lot of tech with what they do also. So I would say those would be my areas. I'm surprised I never dabbled into any pharmaceuticals, but yeah, technology has definitely been the individual when it comes to those individual stocks, that is where I gravitated, especially to Apple stock.
Okay, and then so now that you've figured out which ones that you like, but how do you know when to get out of the stock? Like, far as like you just want to sell a couple shares or you want to get in?
I haven't taken any profit on my investments.
Really?
Yeah, I haven't, but I do trade. So I feel like what I've taken profit on are things that were trades that I never had an intention of holding long term. But, when it comes to obviously my retirement accounts, I'm not retired yet, and I'm not beyond that 59 and a half age, so not touching that. But the other investments that I've been working on, I haven't been taking profit on my investments.
Mm.
And did you have another part to that?
Oh, no. Continue.
So I think the way that you sent me, Anthony, I wasn't sure. Anthony sent me his questions ahead of time, so I know what his questions were supposed to be. I think another part to your question was, when do I sell?
Yes. And you
So
say
when
you
I read
don't.
your question last night, I was thinking about a situation where I did actually sell.
Okay.
I sold all of my JetBlue stock. This was a while back.
Okay.
And I think the way that I invest and the way I go about things might be because I am female, and female investors, I think, and not to say all women are a certain way and all men are a certain way, but overall, I think women as investors have a certain mindset and way of going about investing. And I see some people make that comment and say it sometimes in my comments of women have a hold longer and are more patient or more,
Yes.
just have certain things about them. Okay, but back to my story about JetBlue. When we couldn't go anywhere and we were on lockdown, I bought JetBlue. It was a little like $7 and change per share. And I didn't do much research into it. It was a company that I used and I liked. And I thought because of the circumstances that we were in, like, oh, this is an investment. Let me invest now while there's no flying going on. So anyways, I bought some JetBlue and it was, like I said, a little over $7. I might have bought some more, and maybe my average was pretty low, maybe around, 850 or so at the most, if that. And JetBlue, it went all the way up to $21 and came right back down to 7 and had price targets of 8. But I
Wow.
of it as investment and I didn't sell it. So anyways, I just said this is not the place for me. Technology, that's technology,
Mhm.
Amazon stock, Tesla stock. Yes. This JetBlue is not for me. So I'm selling all of my JetBlue. And I even did a video about it because I was able to look back through my videos. I was able to, search my videos and find it. What I did with I sold my JetBlue at a loss of like $80.
Mm.
And then I let that was in my Webull account. And then I turned on a set it and forget it investment, $5 daily into Apple stock. So I turned
Nice.
JetBlue into Apple. And then I used the money from my JetBlue stock to just kind of fund me in getting started. And I was doing a challenge at the time. It was called Set and Forget It. So that's what I did. And that's, but it took me a while. It took me a while. And I like I said, I watched it go all the way up and come back down and said, oh, what did I do here? But, thankfully that doesn't happen very often in my portfolio. The next thing that might be on the chopping block is my target, which I mentioned in my video.
Yes. Because I was wondering because it's interesting to see how you can watch it go up and then watch it come back down. And it's like the emotional aspect of it all. Like, do you decide like when to not pull the trigger? And because you seem like you long term, but what does that long term look like for you though? Like
Well,
when
retirement is retirement. So that's when I'm of a decent retirement age to tap into that money. As far as everything else, I'm just in a building phase. I couldn't tell you. I'm not in a place right now. I don't need. It's not what I don't need anything right now. You know what I'm saying?
Yeah.
My $10 a day into VTI. Sometimes I think like maybe that'll be my next car, but my car is fine. It has over 100,000 miles on it. I'm not saying it's like a new car or anything, but it's running. I think I have many more years in this vehicle. I don't drive a lot. So I don't have a plan. I don't have an end date on. I'm still in the building phase when it comes to my investments. And no, I really can't say. I do trade. I think I do a little bit of it all. I do trade. I do options trading. I'll do a regular trade from time to time. But I'm not, when I even do that, it's not like I'm necessarily trying to make profit in order to do a certain thing. I just roll it back into doing more of the same or into some of the long-term investments that that I share that I'm, building upon.
Man, I do appreciate that you're keeping the what they call it, not the dollar. I guess you will be considered dollar cost averaging since you're just investing every day. And even with the individual stocks, but mostly ETFs, but to keep that energy going because a lot of people just kind of give up and like, you know what, $5-10 a day, that's kind of a lot to do on a daily. Instead of just doing it, once a month as bulk. So why would you do a daily instead of just a bulk price? Like on a monthly basis.
Well, okay. So some of a lot of my investing stems from challenges that I joined as being part of Keenan Grace's Discord. And that's the way he set them up, like the $10 a day tech stock challenge, or, pick an ETF, or the passive income challenge, all these different things. That's the way I got started, and I like it. I happen to like it. I know it doesn't resonate with most. They're more apt to do, like you're saying, weekly or bi-weekly or on payday, but it's the same difference, especially if you automate it. If I set my app to, deposit $100 every other Friday, but I have my investment scheduled of, the certain dollar amount per day, you don't have to do anything. But by doing it daily, you have the potential of catching a lot of different price points, which may benefit you in the long run. But that's just personal preference. And it doesn't bother me. Some people think it's too much. If it's too much for you, then go about it the way that, works for you. Like when I talk a lot, I always say that investing is not a one size fit all thing. As far as having an emergency fund, there's so many different elements. I don't think that you have to, like with the emergency fund, how they say you should have a year, or you should have 3 to 6 months, or I think it depends. It depends on the industry that you are in. It depends on the responsibilities that you have.
Totally
And
100%.
when I say the industry you're in, how long do you realistically think it could take you to find a job that
That
is
part.
equal to where you were at? So, that's what I mean. So I think everything it's a matter of, like I said, you have to do what works for you.
Yeah.
And you have to know what your circumstances are. And I like when I'm working on a particular investment, I like going about it on a daily basis.
Man, let's make it happen because one of the things is that it goes back to the whole notion of personal finance is personal and understanding of like what it is that you want out of life and if you can achieve it. And I like that you're using your investment stocks as more of not just an emergency fund, but almost like a lifestyle fund. So like you said, for your car, if you were to replace it, you have the means to do that once, obviously once it gets to that amount that you're like, okay, I could just cash this out and pay for it straight out.
Mhm.
So that's amazing. And for those of you who are watching, if you guys are new, I'm not sure of your audience, but if you guys are new, go ahead on and subscribe. She's like what, 10 people away from your goal of
9
nine
now.
people away? Okay.
Yes,
We
yes.
down to 9. Let's make Congrats to that one. Let's go. Let's go. Let's go. We got 9 more people to go. Should we be on there until you actually get all 10?
We will see. I don't
Okay,
know.
let's
I
make it
don't know.
happen. If you
It's
got
been
friends, if y'all listening, if y'all got friends, share this out. And make sure that we can get this extra 9 people out here to make sure they subscribe. If you got an extra account, just go to the and subscribe right now. Let's make
okay.
it
Okay.
happen. I'm
Thank you.
sorry.
No problem. No problem. Thank you. I was going to say thank you for that station break and reminder to the people, but I also want to I saw a few more super chats come in, so I want to acknowledge that.
Thank you so much. We do greatly appreciate it.
So
Like, thank you for appreciating it.
thank you, a brother of a certain age. Thank you. You learned with Robert for gifting 5 memberships and sending 2 super chats today. Same with Joe sending 2 super chats for the day. I appreciate you.
Can I get on some
Rooted.
air horns?
Listen, give
I
me
got
a
some.
second. You got them?
Yeah, I
We'll
got
do-
you.
Thank you, Anthony.
Teamwork.
Vincent and Robert, again, appreciate all the support, guys. So, I wanted to do this, and I've been warning everyone from the last few weeks that to turn on your gifted memberships, because I was going to be gifting memberships. So I think I will do that. But let's do one more question before I do that. So
Okay.
did you have any more questions? We move on to that.
That was actually all 3 of my questions because you answered them all so quickly.
Okay, I did.
Yeah,
All
because
right.
I think the only one that I didn't ask was about like what is for some people who aren't your followers who are new to you, they probably never heard of this term or seen it but don't understand it, which is the price to earnings ratio. What is that?
Okay, so that's a measure of a company's share price relative to the earnings per share. So that is something that can help you in determining when you're looking at a stock, is it overvalued, undervalued, or fairly priced? And another piece that you can go further with taking a look at is the forward PE. So if you're looking at an investment, you can then see what they project the PE ratio to move to in the future. So it's a way of knowing, when, like how they say, some people are always saying, is it too late for me to get in on a certain investment? This is something that can help you gauge that. And, there's lots of resources. The Moomoo Investing app is really good to easily show you these type of things. When I go in there, as far as the PE ratio, they have a nice little like bar graph that shows you the company and then how it rates against the industry, so that you can know, is this company in line with their particular industry, or is it really thriving and doing better? Or like I said, you got to determine, is this a good time to get in and what price? And there are definitely different things that can help you with that very easily if you decide to invest into individual stocks, which is something that you may not need to do. You can stick to an ETF or a mutual fund. I always tell you guys, I think I do a little bit of it all, but you don't have to do all of those things in order to be an investor. I want everyone to be an investor. How far they want to go with it, that all depends, on how much work and time and effort you are willing to put into it.
Yeah, it is something not for the faint of heart. As we were talking about feelings earlier, it's like if you don't have the stomach for it, just stick with the ETFs. That's
Okay.
my thought of it.
So we're at 4,993.
Nice.
Okay. So, gosh, I was having so much trouble with the StreamYard. I'm kind of afraid to switch off to go gift the memberships. But let me also take a quick second to say thank you for Blessed Life for being a member for 3 months. So, all right. So I have a question for you. And this question was one of my favorite questions that you asked me when I
Okay.
was on your show. And it is, what was your worst money mistake? And I actually did a whole live stream
Really?
based on that question because obviously on your on your show, even though I think I talk too much, I narrowed it down like you asked, what was my number one? So I gave you the number one, but I wound up doing a live stream and I named other ones that were also money mistakes. So, I listed more money mistakes that I did and money mistakes that I think most people are making. So, but now since you came up here with me today, Anthony, so that's my question for you. But I'm going to first let me acknowledge Mommy Trader, Shalise. Thank you for tuning in and thank you for the birthday super chat. And I'm going to click over and hopefully while you're answering that question, I don't drop out of the StreamYard, but I'm going to go over and gift the memberships.
Okay.
Okay, but you start answering the questions, so I'll be able to hear you.
Okay, so my worst money mistake, I would say, is letting a credit card balance lapse to sit on. Actually, you know what? No, I take that back. Is allowing somebody to be an authorized user on my credit card and not knowing and also knowing their money habits. And because of that, it actually caused my credit score to drop from a 720 all the way down to like a 580 because they were not good at paying the bills that they were racking up on the card. And then I obviously wasn't using that card, so I wasn't paying any attention. So that would be my worst money mistake. So, lesson learned is if you want to help somebody with their credit, you can do a trade line on one of your credit cards, but do not give that person the card itself, and keep it to yourself and just hold it on to them for like 3 months. Let them go apply for their own card. Then you can drop them. That's one of the things that, as a lesson learned, and obviously, the hindsight is 2020, but that one has really hurt me and caused me to actually learn to be more mindful, to be very mindful, very demure of my uh, credit card usage. And also, the reason why I started my show is to then help others to not make the same mistakes that I did. So that was my worst money mistake. And I got a lot of lessons out of it, but I can tell you that's the cap.
Okay, great information there.
And we didn't lose you, which is great.
Good. I'm coming back. I'm sorry, it was taking me forever to find it. So now, another thing with the StreamYard, I cannot see. Oh, Chocolate Drop, she was here today. So congratulations to Chocolate Drop, Saint Mac, Joe Barretto, Shaka, and Wesley were all gifted memberships. And earlier, let's see, can I find that? Can I scroll back to it? Oh, I can't see. I can't see who got the memberships when Robert gifted earlier today.
Oh, people can in the chat can just snag it up who are logged in right now.
No, YouTube determines who they're going to go to.
Oh,
so I wish I could gift it to who I wanted, but yeah, it doesn't work like that. But you at least have to have it turned on in your settings so that you're able to get them. I always have like at least like 7 to 10 of them at all times.
I may have to figure out in my settings how to accept, memberships.
I can send it to you because I sent it to someone else recently. So I have it handy. I'll send it to you on IG. Okay, so you gave us your whole story about the worst. Now, what has been your best financial decision or best performing investment in your portfolio? You decide how you want to answer the question.
Without getting personal, I will go with the best performing. So the best performing stock in my portfolio was IO and Q. The only reason why I invested with that company was because I invested with them because they're local at College Park in Maryland. So because they were local and they were in quantum, and at the time they were only like $2 and some change.
Mhm.
So I have several hundred shares of it, and then it shot up to like 40 something. And I'm like, why is it $40? It shouldn't be this high. It went up too quickly.
Mhm.
But then it shot back down to like 30 something now. Only
So
because
did you take profit? Did you have a stop loss set?
no, I didn't take profit. I let it ride, and I just decided to buy more because this is a stock that I'm actually fully invested in. I think it can go a lot higher. And then just let it ride. So, but I do need to put in the stop loss though for next time.
Okay. Okay. All right. So I'm going to go on to, well, let me go through the chat because like I said, I didn't want to be dependent upon the chat for questions, but let me just see if anyone did submit any questions that we can take a look at in real time. I don't, do you recall seeing any?
I did not see any. I just saw a lot of people ask, like talk to each other.
Okay. Okay.
Um,
Okay.
I'm scrolling as well to see if anybody.
All right. I don't think we missed any. So I'm going to go to the questions that I
Oh,
got.
well, Chocolate Drop did ask how many away. If you just want to do one more update. We still
Update
only
on
like
my, I will do that. I will do that. But all right. I guess no one. Thank you guys for tuning in. What are questions? What are your questions for Lisa? Okay, that's you. That is you. Let's see.
I mean, I got tons of questions as a podcast. I mean, I always got questions.
It actually went down.
Oh, somebody unsubscribed.
I guess so. I don't know what happened there,
Oh,
but it's a little low. It went down by one. So,
we got a question by Vincent.
okay, how or where would you get started with investing into REITs? Oh gosh, REITs. I'm thinking
I have a
it's a,
few REITs. I got rid of.
you do.
Cool.
So, do you have your REITs in an IRA?
I did not do an IRA. I went directly because I'm invested directly, but I'm using Schwab.
Mhm.
And so with the REITs there, I mean, that's how I found them. I just kind of looked at REITs that were available. And the one that you were telling me about, and I saw a lot of people mention was O. And that was a pretty cool REIT there.
Vincent, I would say you need to determine, what your use when you plan on tapping into the dividends from the REIT. And from there, because REIT, the tax implications are different when it comes to REITs. So from there, I think once you determine that, then you can know if you're willing to take on the higher taxes and have it in a taxable account, or if it's something that you want to hold long term in an IRA. But the only REIT that I have right now in my portfolio is Realty Income, which is not doing very well as far as the share price. So I haven't gotten the balance or that mix of the share appreciation in conjunction with the dividend payout. But there are other REITs out there that like, Stag or other different ones. I don't want to start trying to name
Oh,
them
your
off the
name
top
drop,
of my
yeah.
head, but that's something that you'll need to kind of look into. But that's just my spiel on what I'm able to answer off the top of my head.
And I would say that most of the time, if you don't want to take part in the capital gains immediately, you can always do a DRIP, so the dividend reinvestment into your portfolio. So you don't have to worry about those tax implications until you're ready to realize your gains or losses.
Okay. Okay. So thank you to Chad Money Minutes for the super chat.
Do you want me to
And
do like some air horns or some sonic rings for you for these super chats? So I got
sure,
you.
sure, you got me. I have more things other than that
Okay.
drop if you got tired of it already. But yeah, you can go ahead. You can go ahead because
Right. Let's go.
no no Don DeMarco at the end over there, Anthony.
I know, Thank you for the
Thank
super chat.
You don't like my super chat, Joe?
Oh no, I love it. It's just that I wish I had something like that. I was like, I thought you actually recorded yourself. You just got like close up
No,
on the
no,
mic. Like,
that is not
thank
my
you
voice.
for the super chat.
That is not my voice. That is not my voice. But let me take a look through my notes because I think Chad might have submitted. Yes, I have questions submitted ahead of time from Chad. So let's go to Chad's questions and take a look. So what did Chad say? Okay, so Chad's question. Chad Money Minutes. Check out his channel. For new investors getting started with funds, can you explain management fees and how to find them for ETFs like VOO or the SPY, for example? Okay, so let's go back and share. So the expense ratio, when I invest into a few ETFs in my portfolio, like the one that he mentioned in his question, VOO, as well as like SCHD, SPHD. So those funds are like a basket of stocks and they give you, exposure to hundreds, sometimes even thousands of different investments in one choice. So they're a good choice for beginner investors or someone who doesn't want to take on that responsibility of, keeping up with the individual stocks. That's you?
No, I wanted to ask a question. Is it okay if I share my screen? So when people look at a stock, they can see exactly what you're talking about, as far as like if they're looking at a stock fresh and be like, okay, how much are where can I find out the percentage of the fees will be?
So I was just gonna say, do you ask me? Do you have to request for sharing screen?
I can just present and you have to bring it up though.
Okay, go ahead.
All right. Because I just did what you mentioned, VOO, and then I did.
But what platform are you on? You might be on a platform that I am not familiar with.
Oh no, this is on Yahoo Finance. It's just because it shows all the same numbers.
Oh, I can't see that, Anthony.
Oh my god. Okay.
Okay.
So you're mentioning the expense ratio.
All right. Yes. Okay. So you're on Yahoo Finance?
Yes.
Okay. So I was gonna thank you for zooming in like that. I'm in the what is it called? They used to call it bifocals. Now they call it something, that's an old fashioned word. But okay. So, all right. So back to what is the expense ratio. So when you're choosing your investment, and this is not only about ETFs, I want you to be mindful of this even when it comes to, say, a different fund that you might be in for your retirement account, because that's where I found the biggest problems in my own personal portfolio, and friends that have friends or family members that have shared with me that they were in an investment that had a very high expense ratio, say basically like near 1%, which you might not think that 1% sounds like a lot, but listen, we don't need to be losing that money to fees. Especially when you get to larger amounts, say 1% of $200,000, $300,000. Don't think of it as 1% sounds like nothing, because it can be very significant and you don't want to be losing that year after year. All right. So I talk too much. Let me get back to the question. So the expense ratio is an annual fee that covers the fund management, and it is expressed in the form of a percentage. So VOO, which Anthony pulled up for us, it has an expense ratio of 0.03%. So very low. This is a Vanguard fund, which is a very reputable company. And this fund, it pays a quarterly dividend and it tracks the S&P 500. So it is a fund that I would recommend for a beginner investor, for all investors, to have something like this in their portfolio. Now, it's not always going to have a year like it had over the last 2 years, being up about 24% for 2 years in a row. But it is a fund that will recover. And if you check out one of my most recent videos was on VOO and FXAIX. FXAIX, you're only going to be able to have exposure to that one at Fidelity, but VOO is an S&P 500 fund that you can invest into on many different platforms. So Anthony showed you in real time here one way of where you can find that expense ratio. So I wanted to mention another couple of ways. If you can find this actually in your investment app, whether it's an app like Moomoo or on the Fidelity, you would pull it right up on your desktop, sign in, and you should be able to find this information. Another way, another tool that I like is something like Morningstar, because when you go in there and you pull up a fund, it'll have it, it'll have a rating. It kind of gives you a report card of a fund right on the screen. So with that, you're going to put it in for us? Great.
I mean,
great.
teamwork. I mean, we in here.
Let's see.
So this is the same company, VOO.
Mhm. Can you go up to the very top of the page? See, this is a 5-star rated. That just keeping it low level for someone just starting out. 5 stars means listen, I went through all the points of how they go about rating their the investments in one of my videos also. And I was actually invested in a fund that was 1-star rated.
Oh
So
no.
at a glance, as soon as I went in there, I should have known, like, run for the hills, get out of this investment. And that's what I did. But okay, so 5-star rated, but there's also, can you go back down a little bit? I think there's an error when it shows us the expense ratio. Can you zoom in?
The expense ratio. Yes.
Is it over there?
Yep. I got you. The adjusted expense ratio. So they do call it different things, it looks like.
Yeah.
It's interesting. So they got adjusted and then they have their regular one. So
this isn't showing the way that I expected it to. But let me pull it up.
Oh.
Do you have? Oh, you probably not signed into it. But yeah, basically what I want to say is what?
No, go ahead.
Am I saying the same thing over and over, Anthony? Why
no,
are you
you're fine. Because I was like, all right, go ahead on and complete your sentence. Like you're like me, like if something jumps around, like
I'm
all right,
all
cool.
over the place. I'm all over the place.
But I can follow you,
Right.
and obviously we all can follow you.
But the point is, depending on what you want to have exposure to. I'm not saying that every expense ratio everything that you're going to want to have exposure to is going to have this low of an expense ratio, but be mindful of it and, have a standard. And my standard 1% is way, way too high. There is nothing that I want exposure to in my portfolio that an expense ratio that high that could be justified. I don't even know that I've seen anything that I would go 0.5% for.
I did pull
personally.
up a what do you call it, an expense fee ratio just to kind of see the difference. I'm not sure how deep you want to get into this expense ratio today.
No, I want to kind of cover some other questions because we've been going for a bit and other people did submit questions, but I definitely wanted to touch on that one because Chad had submitted it. And yeah, another resource I just wanted to mention is the ETF Research Center. That's another site that I use. And right at the top of it, even more clearly than the Morningstar that Anthony pulled up for us, they have like a green to red bar at the top. And with a little arrow as to the fund that you're looking at, what the expense ratio is. So obviously you want to be down in the green side. And if it is in the middle or towards, towards the red, you have to do your research and really be in tune with, is this investment, the performance worth the fees that I'm going to be paying, or is there an alternative investment with lower fees that I can there it is. Thank you, Anthony. Do you use this site?
No, it's the first time hearing about it.
Oh, okay. And you already got signed in that quick? Did you made a profile, or how'd you get in
No,
there?
I just type in
Okay, you didn't have to sign in?
mm-mm.
Okay. But yeah, that's right up there in that top right-hand corner. That's what I was referring to. So yes, you know that this is a low on the low end of what we're talking about. Okay, so I think that was the only question that I had from Chad, but I'm going to go on to another question that, oh, Joe, our new member Joe is here and left us.
What we doing?
Thank you for the super chat.
What is Anthony, you are so silly.
Hey,
Listen, no, we're gonna give Joe the real deal.
Thank you so much. We do greatly appreciate it.
That's what Anthony is over there mocking. But yeah. Let me see. Okay. I have okay. I can't hear it because I don't have my headphones on.
Oh no, well, I heard it clearly. I got you.
But okay. Excuse me.
Thank you for the I can't.
Let me get a sip of water.
I need
Well,
it.
it's not water, it's tea.
Yeah. Well, I love the fact that you got that. That's really cool.
You must not, because you keep teasing me.
No, I don't. I actually do appreciate it because a lot of people do different things for the super chats. So that's actually pretty cool. Just gives something to think about.
Okay. So I saw a little while ago, I saw David in the chat. David, I sent you the link. So, you were free to hit it if you did want to pop up and ask your question, because you didn't tell me your questions ahead of time. All right. So
There was a question from Don. 380s. Yeah, he says, do you think Trump administration will or is having an effect on chip stocks?
I don't see the question. Oh, do you think? Oh, God, I see it. I really can't speak on that. I'm really not sure. I don't have an answer on that one. But I do definitely. What stock is there? A particular stock that you can mention, Don, if you're still here? When it comes to so many other things, like obviously crypto, the amount of and certain industries that have made substantial donations to his inauguration funds and things like that, and his personal relationships with Elon. There's just so many elements to it.
And then also the narrative that everybody else is pushing, like EVs, and then so like it's so many different people in that realm.
But I really can't speak. I don't have personal knowledge or that I can really get in depth with your question concerning the chip stocks and what the administration is gonna, how it's gonna be impacted by his administration when it comes to that specifically. But that's something that you should be able to easily check out, especially because it's not his first presidency. And we know we can reflect and have the insight of already how things went when his administration was in office prior. So, but let me move on.
All right. While you're moving on, can you do a quick spot check? How many people you got?
An update on my, let's hope it didn't go down again. I'm at 4,995.
Yes.
Okay. So
All right,
now
5 more. Let's go.
And thank you again for that super chat, Joe. And Joe, you are a gifted member today, I believe. So let's go back to. So Rem is commenting on some high expense ratio funds. Yeah, we don't want to know anything about those. No, thank you. But yeah, please have your eyes open to that. That is something I love to call attention to. Oh, thank you for the birthday wishes, Lonnie, and thanks for checking out the live. Okay, see, Anthony, you're the only one who wasn't shy and came up here.
Hey, I mean, that's what we're here for.
All right. So Kiki Adventures, another community member as well as YouTuber, submitted a question to me ahead of time. So she said, so it's January. What would you recommend as the number one thing people should do to get on a good path for 2025? So why don't you, do you have an answer for that, Anthony? You're nodding your head.
It's such a loaded question on that.
I know.
Because for one of the things that I'm focusing on myself, I'll take it personal. Let's go personal. So one of the things that I'm doing is actually downsizing a lot of the things, trimming the fat, as a lot of people would say, which is getting rid of some of the subscriptions, getting rid of extra expenses or AI tools that I'm paying for, to kind of then hone into what do I really want out of life, because it's like almost like a reset this year. And because I'm taking that time out to reset, it gives me time now, okay, how I'm going to adjust my investments. Do I stick down to the just 5 or 6 stocks now versus the 10 or 12 that I had before? So that's what's causing me to actually start to look into the companies that I'm familiar with, the companies that I think that's going to go long term. And so that's where I'm actually putting most of my investments. And they've been turning out really well. So everything on my portfolio right now, except for one, is over 100% return. So
Ooh, you're doing better than me, Anthony. You are doing great. I think in my growth portfolio, as far as, outside of my retirement accounts, I think I've only had one investment that's been over 100% return. I mean, I have others that are, over 50%, maybe even 75%, but I only had one recently, and that was Tesla, that was over 100% return for me.
Oh,
so you
that's
are doing
awesome.
you are doing excellent. If everything except for one is over,
Yeah, it's
100%.
about one.
Yeah.
Because I was mostly into quantum like for a while, because it was around $2 to $4. And I was like looking at from a tech person myself, I was like, okay, well, data is being taken care of. Power is going to be another option, because a lot of people are trying to figure out a way to lower their carbon footprint. So power is one of the things that they're going to be shutting down. And then you also got to look into how are they utilizing what is the next big thing, is the way how we're going to transport data. And since we're looking at how quantum can actually be utilized, and not just from a technical standpoint, we want to look into more so the speed of communication. And so from quantum perspective, they just recently, I'm going to say they, scientists, have just recently tested out on the internet that you can actually transfer qubits, in multiple places at the same time. So it's just a matter of time before we're going to be utilizing it in the internet space, before we even utilize it for computing space. So I think once we build up the speed on communication, then how we're going to store that information is going to also change as well.
Okay.
So that's what.
So back to your question that you asked me earlier in the show. What is the industry that you sounds like your portfolio is very interesting. What is that industry that you are gravitating towards over there?
Mine is mostly technical. Let me pull it up right quick. Let's see. I'll say, because I've been trimming down a lot. So I have, it's all technical except for one, which is, I'm not even sure they want to call themselves a REIT, but it's Iron Mountain. Um,
I'm
yeah,
familiar with
everybody's
them.
familiar with them. And then Rocket Labs is the only one that's giving me issues.
Mhm.
RKLB, but everything else is all quantum, and
Okay.
obviously Amazon. So that's about it.
All right. Okay. So now let me answer Kiki's question, which was, so it's January. What would you recommend as the number one thing people should get
Oh, I'm
on
sorry.
path for 2025? No, I made this I was hoping that this show, I wanted you to answer the question, Anthony.
I answered the. Well,
I know you did. I just saying I want to make sure that I answer the question
oh yes.
before I move on, because this was supposed to be, people got their chance to Q&A me. I don't want to accidentally turn it into me asking Anthony.
Right.
Okay. But why isn't that saying sorry about that?
No.
You,
I'm
you
sending
you
this
did
her to him.
something wrong with the link. Okay.
Yeah, I put them to mine and set it to yours.
The one, no, I am not invested into quantum computing. I see a question in the chat there. So, okay, back to Kiki's question. Yeah, like you said, this is a hard one. And I think that this is something that you need to tailor to what's going on in your personal finance life. So you need to evaluate. That's what I think you should do for 2025. Evaluate your whatever is going on. Evaluate your expenses, your income, your investments, and just make sure that you have your eyes open to where something could be lacking, where there are any problems, and then go about making a plan on how to get that corrected. And don't drag your feet on it. This is not something that should take months. Don't let June roll around
Mm-hmm.
and you haven't made the improvement that you discovered in doing this audit as we kick off 2025. And then, you have to be consistent. You have to put in the work to do whatever it is in order to budget, in order to perhaps rebalance that portfolio, get out of a fund with some crazy expense ratio, whatever is going on. So my thing is evaluate and find out where you're at, find out, are you on track? You have to have goals in order to know if you're achieving them. So a big one that I'm always talking about is that retirement. What is retirement going to look like for you? If you're 45 now, in 20 years or 25 years, okay, you're 65, 70. What you're doing today, how much on a monthly basis is that going to generate for you when the time comes? And then add what we think we might be getting from a pension or Social Security to it. Now, is that enough to live off of? Now, I know that's hard. It's hard to come up with all the variables and, how much inflation and how much things are going to cost in the future. Is your house going to be paid off and all of those different things? But you have to try. We can't just
Yeah.
say, oh, well. And another element to it is how long are we going to live? But we have to make effort and do our best to take care of our older selves and make a plan on how we can live going forward and have financial stability. So that's my thought process on that question.
Yeah, can I add on to that just a little bit? If
Mhm.
people looking to figure out how much should they have for retirement, they usually use, there's a couple rules that are out there. The one that I liked recently is a 358 plan. If you take your monthly expenses and multiply by 358, you'll usually, I'm sorry, take your annual expenses, multiply that by 358, and you'll actually come up with whatever you need for your retirement. So that should take care of most of it. As a rule of thumb, it's not like the actual thing. Obviously, your expense is going to change. Tax laws change every year. So just kind of be mindful of those. Just want to add that in, if you
Mhm.
don't mind.
No, I usually use an image that I came across on the Fidelity website, saying, by a certain age, you should have an investment account equal to your earnings, and you should have 1 year invested by age 30, for example.
Mm.
So I know when people usually look at that and they see, 30, 40, 50, and they're drastically below what they should have invested. So, and obviously, again, that's another element that you need to be having your mind on, your earnings. And if you're a high income earner, you need to be investing heavily if you want to continue to live the way that you're living currently in retirement, uh, because your expenses are going to maybe be more significant than others, as far as if you have, a larger home, your taxes, your insurance, and different things like that. So you have to make sure that your investments are in line to keep up with the lifestyle that you currently have for yourself as a younger person, um, because no one's coming to save us. Unless your kids are coming to save you. That's the plan. Let your kids know
Right.
that that's your plan, that you're always talking about the sandwich generation.
Hmm.
But okay, so let's go on to another question from Sledge. Another community member gave me a couple of questions. So, what is one lesson you know now about finance you wish you knew earlier?
Mm.
And I think for me, it's that the power of compound interest, and just having an understanding of even small amounts, being consistent with it, it really matters in the long run. And I wish even in my 20s or, very early 30s, that I was prioritizing every time I got a raise or I got a tax refund or whatever, that I would take the opportunity to take a percentage of that and set it aside, even a small amount, because it would grow dramatically, instead of spending it or even holding on to it in a savings account. Because back then I was definitely using a regular savings account at the Bank of America, the local bank, the local credit union. So I wasn't gaining any interest on anything I ever held in that way. So if I could have sacrificed a little bit of it then, it would have helped me in the long run. So that's one lesson I wish I knew earlier, and something I definitely am trying to hope that young people around me know, that I'm passing on that knowledge now. And did he have another question? Did you want to share
Oh,
any answer on that question?
yeah. One of the things that I wish I would have learned early on is real estate. Um, Not just from a financial standpoint, but more so just a strategy to add into, from a financial standpoint, of like how to rent, how to deal with people and their problems, more so. Because that's one of the things I think is more of a life lesson for me, more than just the money side of the house, because we're all going to need a place to live. So that's kind of one of the things that I kind of wish I learned sooner.
Mhm.
Um, you know, play Monopoly and then trade in all the houses and get a hotel. That's
Monopoly.
yeah.
Now, I'm sorry, I jumped out of the
I like
yeah.
Tuber Chat. Welcome Tuber Chat, because I actually follow him from time to time. Forgot his name.
Kevin.
Kevin. There we go. Yeah, Kevin's cool.
Hmm. I went over, sorry, we could not update the post. Okay. So I'm sorry, I jumped over to my YouTube studio. I was trying to see if I could get a count. Let me go to my analytics.
I refreshed on your page and it's still showing 4.99.
Okay. All right. Let me see. Let me come back to StreamYard. All right. So thank you for sharing us out, Kevin. And let's see. Okay, so a brother of a certain age is sharing. That's what he did this year. My whole raise went into my 403B. So essentially,
Nice.
I never seen it in my paycheck. Exactly. If that's something that, and I'm not even talking about, I don't know what percentage of a raise that he got, but even, those years when I got, say, a 3% or 4% raise, I definitely, not every single time I got a raise did I say, 2% for me and 1% addition to my
Oh my God.
investment account. So that's what I mean when I say what I could have done, a lesson that I wish I would have known earlier. That's the way I would have gone about it if I knew better. So
Which means if they do a 503B, I think depending on where they at, they might be able to, if they're a teacher, they can also invest in that 457. Because I know some, local governments will allow you to invest in the 503B, and some of them, because I used to get it in the company that I worked for, which was NASA at the time. They actually, I didn't have to do anything, and they just invested the money. They just gave me like 10% of my income go directly into the retirement account, which I thought was great. So it depends. If you have a 503B, see if you can actually qualify for the 457 as well. So you can actually put money into that avenue.
Okay. Okay, I'm trying to just take a look back and see if there are any questions. So Reem was asking, do I have any experience with Robo Advisors, and did you like it? No, I've never used any Robo Advisors. I'm curious about that. There's one that follows the Nancy Pelosi and those type of people.
Oh,
that
yes.
people copy their- I'm curious about it, but no, I've never done anything like that before.
Have you seen a chicken advisor as well? Like there's a guy that only trades based on whatever the chicken selects.
No,
Yeah,
no. Let's not do that, guys. Let's
no,
not.
please don't.
Okay.
This for educational purposes only.
Okay.
Obviously not give you advice.
So a brother of a certain age was listening to what you were sharing earlier. Okay. So super chat. Let's see. Let's see. I saw something else before okay. Stock Talk David. How many positions should a new investor have in their first portfolio? And at what point would it be okay to start a second, third portfolio? Second, third portfolio? I thought it was going to say add a second or third investment. Ooh.
It is something to think about.
Let me, I don't know. Let me think. How many positions should a new investor have in their first portfolio? I think one. I think you should start with maybe just one or two. Okay, at the most, maybe 2 ETFs and 2 tech stocks or something like that. If you even want to get into the individual stocks, but maybe just start with 1 to 2 ETFs. Do your research. You don't have to jump in on the individual stocks. But if I was a new investor, or if I knew for some reason, I don't want to use anything crazy, but if something was to happen to me, I'm off on, what was that? Castaway. I'm castaway. I'm on the island. I'm alive, guys, but
Right.
I'm on the island and I can't get to my portfolio for a couple of years or a couple of whatever. I would say I would be, when I came back to my portfolio, I think I would be okay if I was invested into, say, for example, VTI, 100% into VTI or S&P, or my FXAIX. I think I would be okay. Or even right now, though, a few years into a big name tech like Nvidia or Apple or Google, I think I would be okay when I got back. But I would definitely have a very high percentage into an ETF. Now, as far as multiple portfolios, I don't know at what stage you're going to get into that, because I really think people need to focus on retirement accounts. You hear so many times the statistics of people can't even manage a $100, $1,000 emergency, or
Even
those
$400 right now, it's lower.
down to $400. Yeah. So you hear all these statistics about, you see people, I'm 60 and I don't have anything, I don't have any retirement investments at all. So with that, I think that that's where the focus needs to be. Getting a solid retirement account in place. And then, once you have yourself well taken care of there, then perhaps you can move on to multiple portfolios. And I mean, seriously, even above, I'm sure that there are some, with hearing these statistics, I'm sure I have a feeling, I have no proof of this, but I feel that a lot of people are contributing to sweet 16s, even their children's weddings, and so many things that they cannot afford to be contributing to because they have debt and they don't have retirement investments. But they're doing those things. And I think that a lot of things should be at a smaller scale because we need to be focused on the long term. What did you say?
I said, don't get me started with that
Don't
one.
get you started. No, and I like all of those things, but I just think that there needs to be a balance. There needs to be a balance. And I was on someone's panel recently. Let me go down to the bottom of the chat. Thank you, everyone who is tuning in. And thank you for all the birthday wishes. I appreciate it. So I was on someone's panel recently, and I talked a little bit about and my daughter's UTMA account, and she has a Fidelity Youth account, and I teach her about investing, and they said, and we were talking a little bit about 529 plans and stuff like that, and someone in the chat, which I wasn't speaking to them, I was on the panel, they were in the chat, and they made a comment about these kids need to, we don't need to spoil the kids, and
interesting.
they need to, the kids need to work, and we don't need to spoil them. But at the same, I didn't talk to this person. I only saw their comment.
Mm-hmm.
And my reaction to it was, if I said I bought my child a gaming system and some sneakers for Christmas, would you say I was spoiling her? But if I say I bought her some Apple stock, and if I say throughout, if I said every month out of this year we've invested into Apple and VTI, is that spoiling her? That's spoiling her. But if I bought her a birthday gift and a Christmas gift, that's not spoiling her. Right. That's the interpretation I got of the comment of we shouldn't be investing. I shouldn't be helping her to build an investment account and a savings account, but it's okay to, I'm assuming this person would be okay with gifts.
It's sad though.
I don't feel that that's okay, guys. I'm exactly at 5,000.
Yes. Wait, we got some music. Do you have your?
Thank you, everybody, for reaching 5,000.
Now, non-content creators, you might not understand this, but sometimes you get to a certain number and it goes down. So I usually let it, build up a bit before I officially would have said it. But because I'm on the live right now, I'm sharing with you that I'm currently at 5,000 subscribers.
And I just refreshed and it shows 5,000. So
you can see it. You can see
yes,
it.
I can see it on my end.
Okay.
Congrats. Like I said, we want to be on here till you get to 5,000.
All right. And we've been on here for 1 hour, 1 hour and 8 minutes.
Mm-hmm.
So let's see. Yeah, Anthony, we'll have to talk another time offline.
Okay.
So I'm a little boring with my live streams.
Oh no. I got music over here and everything. What you need?
Oh shoot. And you know what's funny? In my Nightbot, I'm gonna have to update Nightbot to say road to 6,000.
Let's go.
Okay, because I did it. When I was at 4,000, I updated it to 5,000, and now it's time for another update.
All right, let's give you a round of applause as well for that, because I mean, you put in some work.
Thank you.
Yeah. It's interesting because I have a birthday party. One of my friends' birthday parties, his daughter is turning 5. And one of the things is that he sends out now as a gift is to have people donate to her 529 plan. And you can
And
donate anything you want. He don't want you to bring any gifts because she already has a lot of stuff. You
yeah.
just kind of just donate. And that's why I was like, for my nieces and nephews, I'm like, hey, just send me the 529 link. I'll donate. They don't need to get gifts from me. They already getting gifts from you all. And that $20 can turn into $1,000 or even 10,000, depending on how long. But I have to say, like, I learned this from Wall Street Trapper because he's been locked up. I haven't. But the cool thing about investing, if you were to get locked up and they freeze all of your assets, they don't freeze your stock portfolio. So your money can still be growing while you locked up. So when you come out of jail, you have money available.
So
So
Anthony's tip is put your money in
I'm gonna-
investments because they're going to be growing while you're locked up.
right.
That's an
Well,
interesting
it's a look at it as another avenue because they don't think a lot of people know about how to invest. So if you want to invest, go for it. Again, at 5,000 subscribers, congrats. You've been doing amazing work, Lisa. And I've been watching your growth slowly on the sidelines. And I just want to personally verbally say congratulations.
Thank you, Anthony. And thank you for having me on your show last year.
We'll
I did
put on my
highlight.
thinking hat.
Well, I had a bow. I had this bow on my mic, but it wasn't well secured. This was gonna be my birthday decorations of the
Oh, that
day.
looks cool.
But I took it down because I didn't have it secured and it was time to go live. So I did a little unboxing of some goodies, but I didn't share it on YouTube because I try to keep my YouTube content to, stock market related. But if you guys have me on TikTok or other platforms, you might have seen that. My daughter sent me some goodies from this brownie company yesterday.
Nice.
Okay, so there's one more question that was submitted to me ahead of time that I want to get to. And then I think I did a lot of them because like I said, I wanted to have some content, prepared for the show. But okay, so this person over on Wellness with Frugal Mama's channel,
I'm familiar with her.
Okay, I'm on the channel. I'm the member of the month
Nice.
over there. So she posted my video. I think she posted one of my videos and someone underneath that video asked this question. So they said, "Hi, Lisa, I am curious on how to start a Roth IRA for my kids legally. They are too young to have a job and it seems a waste of time to wait." I'm reading it exactly how they posted the question. Okay.
Legally.
Okay. So this is my answer, and then you can chime in with any points that you have because I know you are versed in this also. There is no way for you to legally open a Roth IRA for the child unless the child has earned income of their own. And from this description, it seems like her children are definitely well under the age of 14 because she did reference that number age in her question also. So I wanted to touch on a few alternative options that she could go about doing because these children are definitely not working in any capacity that she, can justify opening the Roth from what I read.
Okay.
So there are custodial accounts such as a UTMA or UGMA accounts, which will allow you to invest on behalf of your children. And then that account will be transferred to them when they become the age of maturity in your particular state. There are also 529 plans, which are tax advantage accounts for education expenses. So there are individual 529 plans as well as a custodial 529 plan. So I think that when it comes to this, you need to take a look at, have an understanding of your personal financial needs of your home and who you want to be the tax implication to be against. Do you want the funds, is it okay for the funds to be in your child's name, or is it more beneficial for the funds to be against your name when it comes to the time when they're going to be applying for college and doing their FAFSA and all those things? So I think that's where you need to put in some research as to what you can do as far as the best account for your child. Another account that my daughter has is the Fidelity Youth account, but that's not going to be available until they are 13 to 17-year-old. So that's the account that she has. In addition, she can invest in that account in addition to her UTMA account, which is what she has. She doesn't have a 529 plan. And she also has a debit card with that Fidelity Youth account. So it's a good way once they get to that age range of being able to teach them about money. So that's all I have on it. Is there anything that I missed there? Anything that you want to add to that? Because she wants to know how to do this
legally, right?
legally.
Right. So I went to the IRS website just to kind of see if they had anything as far as age limits to opening up a Roth IRA. And they don't have age limits for a Roth IRA. However, looking
It's the
at
earned income part. It's not about the age. My if your child is 5 years old, but they're an actress or they're making money off of their YouTube channel, whatever they do,
right.
most children under the age of 15 or 16 do not have earned income of their own. If your child is, even if it's your own personal company, you have to show that they earned the money. So that's the point where I think that she's trying to figure out a way around. The Roth IRA is, my daughter's not working yet, so we haven't gotten there.
And that's what most of them were saying is like, even when I was looking at the different brokerage firms, it was like, you're going to have to do it the way how you're doing it currently right now, Lisa, which is you have to open up custodial accounts and just do it that way. That they don't have a direct channel directly. So
what was this party hat here for? Was this from Cinco de Mayo or something?
This is actually from a bottle of tequila, but we're not going to go there.
You see, I said Cinco de Mayo. You say tequila. Yeah, there's some liquor. I think it's Tito's. Tito's vodka. They're always putting a sweater or something on the bottle at certain times of the year.
Yeah, this one had a poncho, and it didn't fit the mic all the way, so
okay,
we just cut the hat.
Okay, all right. Fidelity. So Chocolate Job is asking, is Fidelity online only?
No, they have brick and mortar buildings.
They do, and I happen to be there's a Fidelity one town away from me, maybe a short drive. So Fidelity is accessible to me to go in person, but I've gotten a lot done virtually without having to go there, especially when I'm working during the day, even if I'm working remotely. Who has time to be driving over there? So I've gotten a lot of my account setups and things that I needed to get done virtually. They have really good customer service, and even when I call in, they have this voice verification. So even if I'm driving, even if I'm driving, they're able to authenticate me by my voice, and I can, ask a question and get things done and tell them, hey, okay, I'm driving right now. Can you email me a recap of this? Because you have to make use of all the time that you have every minute of the day and not make excuses as to I couldn't get this done and I can't do this and that and the other. But yeah, I don't know. You'll have to look up and see if there's Fidelity, if there's any local Fidelity branches close to you. But I happen to be near to one.
Yeah. I guess I would say just to add on, if you're ready to wrap up, I just wanted to say one thing is a lot of people haven't done this yet. If you switched jobs recently, make sure you go back and look at your retirement accounts and have those rolled over to your current brokerage firm or whatever brokerage firm you choose to. It'll just turn it into a self-directed IRA, because I don't want you to get taxed by pulling it out prematurely. and then it hits you up, and then you got to pay all these taxes. Just roll it over, at least so you have control over it, and just you can either look at similar stocks and so forth to kind of make sure that you're hitting your target goals. From back to we talked about, how do you want to start the year off, right? You start the year off by taking control of your finances and know where everything's at.
Mhm. And you're saying about the tax implication of taking the money. My biggest stress when it comes to that is that you're just changing jobs and you're starting at zero again and again and again. Keep the money invested, even if you've only been with the company a short amount of time, because I think that's where this issue usually comes in, is that they have limitations, and you only built up a few $1,000s, or a smaller amount than they're willing to allow you to keep invested. So they're here, take it as a payout.
Mm-hmm.
Even if that is the circumstance, don't take it. You were living without it prior. Make sure to keep it invested. Do every step that you can to roll it over and keep it invested. And even if you do change jobs frequently, every couple of years, or whatever your circumstances are, I know I don't change jobs. I get laid off.
We had that discussion.
Yes, we did. Oh, I called into Anthony's show one day when I shouldn't have been on anybody's show. I was in an emotional state.
Yeah, you were. I was
But
like,
yeah, let's not talk about that.
Yeah.
But
listen to that episode. Let's go back.
No, don't
Oh,
go.
no, you said don't. It was a live show, but you called in. I can't remember what live show you called into, but
yeah, they won't be able to find that show. But
Okay.
anyways, guys, over on Anthony's channel, I think I was the most viewed interview of 2024 over on Anthony's channel, on YouTube at least.
Yes, you were on YouTube. Yeah, definitely on YouTube.
Okay, so Chocolate Drop, I'm sorry, I did miss your question about dividends. I will try to take a quick look, but yeah, I'm going to wrap up because Anthony has kept me company for an entire show, which was unexpected. And I thank you for that, because I like having co-hosts.
Oh, really?
And you have knowledge, and you answered questions, and you asked me questions. And I like to have someone on the panel with me that also will ask me questions to help to highlight, let people to get to know me better. So, and you will be seeing Anthony again on my channel, because we are planning on doing something soon. But I am sorry, I don't know where Chocolate Drop's question is.
Yeah, the only other question that I saw from Chocolate Drop earlier about dividends. Chocolate, can you just retype it right quick so we can make sure we get it? Because
I don't know
the
if
only
she's
thing
driving or busy or what. Okay, I found it.
Okay.
What are the best investment/stocks with dividends? This is a hard question too.
Yeah.
That's a lot. That's a lot right there.
Because you can go back to like how you said with the ETFs that had dividends. And that's one way to kind of get started and have it do the drip option with that, so you don't have to take the wins. I mean, that's one place I would say as a cheat code for those of you who are new, is just check out ETFs that are already doing it and look at the top ones that are out there, and it will actually show that portfolio, like what is in the particular ETFs if you're looking for individual stocks. But like Lisa said, she focuses on ETFs, so let's go with ETFs. And then try to look for the dividend ETFs. There's several of them out there. Obviously, we're not here to kind of tell you exactly which ones, but that's where we go.
I recently shared, I think on Thursday, I put out my dividend update. So Anthony's channel is, I just put up let me hide that, because I think that makes it go away. Okay. So Anthony's channel is About That Wallet. That. When I go to search your channel, sometimes that throws me off.
Everybody wants to say About the Wallet.
Yeah, I do. I do.
So I bought that domain as well. So it's like, it'll forward over.
Okay. So I'm sorry I don't have his channel handy to drop it in the chat, but it's about that wallet. Is that what you are on IG also?
Yes, on all social.
On all social. Okay. So I think I said it. I stressed it enough so you'll know that it's that's in the middle. Okay. Oh, thank you. A brother of a certain age just dropped, I believe, maybe Anthony's channel in the chat. I can't tell what it
It's
is.
probably the live. I'm gonna check right now.
Is it? I can't see. Thank you,
It-
mods.
I just posted it, and because obviously it's a delay here. Come on.
Thank you, Goga, for tuning in. Stock Talk David said he just subscribed over on your channel.
Oh, thank you guys.
And it looks like Chocolate Drop found you over there because I see a little paperclip on her name. Let's see.
Oh, thank you.
Okay. All right. So one more check. 'Cause I know Anthony has things going on and his family is probably like, what the heck is going on? I went down. I went down by
Nobody's caring
one.
about me.
I went down. I went up to 5,001 and I came back down to 5,000.
Oh,
But listen, by next Sunday, I think I will solidly be above 5,000. But thank you guys for tuning in. This was the Sunday Stock Talk / birthday live stream Q&A. I don't know if I will do this again, Q&A, because you guys don't submit your questions ahead of time. But I figured it out, and maybe I will figure out how to do it again. But let me know if you guys have any questions. I will work on compiling. If you guys do drop me questions, I will work on compiling the questions and I will do another live like this if I have the questions building up. But if not, I will have to come with a topic of the day. But I will be back next Sunday and every Sunday at 3 p.m. Eastern Standard Time. Let me go back.
what?
Thank you for the super chat.
Thank
Goga.
you for the super chat.
Come on now, like get the thing out.
Goga.
Gotta get the
Goga.
official.
We need something official for Goga. You're getting tired of my
Let's go get this money.
something for Goga. Proud of you. Thank you, Goga. And let's go. All right. So, guys, thanks for tuning in. Thank you, Anthony, for helping me coming up to ask your questions. But in addition to that, answering questions and being a part of today's discussion, because that was not really a planned thing, but I appreciate you, and we'll connect on our other things that we have going on. Do you have anything to close out before we end for today?
Well, I just want to let everybody know who's listening is that you have what it takes, and no matter what anybody else say, this is your life. They not paying your bills, and stay focused, stay true to yourself, and never give up on your goals. And if you decide to give up or quit or pivot, just keep it in the back of your mind. You're gonna come back to it. You're not one-dimensional. You're multi-dimensional. So you contain multitudes. Continue on and thrive. You got this. And I'm rooting for you. So I got.
Thank you for those words of encouragement. Thank you guys for all the birthday wishes. Now, again, oh my goodness, 14 things. But I want to, again, thank You Learned with Robert, Vincent, Famous, Thrive and Glow with Joe, formerly Joe Delaney. I have to get used to the new name. Robert, gifted memberships, a brother of a certain age, my channel members that came through today, Blessed Life Journey, Mommy Trader, Chad for the generous donation, Joe Barretto, Goga. Thank you all for the super chats, the gifted memberships, for being long-term members of my channel. I appreciate all your support and encouragement, and of course, your birthday wishes. So I will see you next week. Thanks for tuning in, and I will see you soon.
And to investments, she make a lot on YouTube. Lisa J Stocks, Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah, you will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay, she'll make it pop. If you wanna make some money, visit Lisa J Stocks. Yeah, hey, you will make a lot. If you wanna make some money, visit Lisa J Stocks. Hey, she make it pop. Hey, Lisa J Stocks. Lisa J Stocks. Hey, Lisa J